Alright guys, welcome back. So SPY technical analysis going forward for the rest of the year. I hope you guys all having a good weekend. Merry Christmas everybody. So let's have a look at the daily chart of SPY and what happened this week. So this week we had basically overall low volume except for one day when we had very big flushy move after GDP numbers came out. Pretty big flush down and then reversal, and basically Friday we did nothing. We pretty much chopped around and managed to close positive, by the way. So if we take a look at the weekly candle for that week, past week, you can see slightly negative, and basically I call this indecision candle. So from here we can either go higher or lower. And what I'm watching and what sectors did. Also, I want to dive into the sectors and what stocks are doing well, what stocks are doing poor, even though but just to show like where the money is going right here, right now. So in terms of levels to watch from here, basically on my chart, again, yellow line represents 50-day simple moving average. It's been acting as a resistance so far. So I'm going to be watching this level as a resistance going forward for the rest of the year 2022. And as a support, basically these lows looks like 377.50. That's what I'm going to be watching as a support so far. And also below these levels, I will be watching 370. 360, just like we talked, as a support, basically going into January. January historically little volatile, and it's also Q4 earnings, second half of the January. But first half of the January, volatility comes back after New Year, Christmas, and you will see a little bit of a volatility in January. So what else I'm watching from here? So basically that's SPY, and you can see that after this 4 or 5 days of pretty big spike volatility, you can see that this last week we didn't do much except for that one day, Thursday GDP number day, where we had a pretty big round trip. So in terms of sectors, so I was looking at the weekly performance. Let's take a look at what happened. You can see where the money was going. Basically, people bought the dip in energy, healthcare, slight gain, a little bit of a gain in financials, and consumer defensive. That's where the money is gone. And you can see the cyclical names such as Tesla, Amazon, they were weak. Semiconductors sold off. And you can see, let's have a look at the XLK or XLY, this is the discretionary ETF, XLY. You can see that it's made for the week new low, and we didn't close there, but you can see it's been in a downtrend. And if you take a look at the weekly chart, it's been coming down. We're now sitting back at 2020, beginning of the year, pre-COVID highs right now for XLY, which basically discretionary spending. When people are uncertain, when people in a saving mode, and people are they don't know basically going forward, like uncertainty, why would they go out and buy Tesla or buy Nike shoes? Or so this is discretionary spending. Like these are just wants, okay? They're not needs. So, and you can see like what stocks, top 20 holdings: Amazon, Tesla, Home Depot, Nike, McDonald's, Lowe's, Starbucks. You don't have to go to Starbucks every day, right? But you will probably go to defensive names, right? Such as you will go to grocery shopping, you will go to basic needs, like you will need gas to commute, you'll go get energy, utilities. You have no choice, right? Those are like basic needs. So those sectors did well. You can see the industrials as well doing very, very well. You can see XLY were probably the Caterpillar, John Deere, I thought, but you can see like what stocks have been holding it up. This sector, you can see Honeywell, United Pacific, UPS, Caterpillar, John Deere, Lockheed Martin, Boeing, GE, 3M. So that's where the money is going, and I have been watching basically recession-proof sectors to the upside. I haven't even been trying to short these names, but there will be a time even this sector will pull back, and that's when you can see overall market get pretty big hit. So far, damage control has been maintained by these names, I want to say, by these sectors like industrials, energy, healthcare, and also that maybe financials doing a little bit better as well. But they will pull back as well. Financials, well, we have financial conditions basically getting tough and tough. We have basically 3 more weeks until they start reporting. So we're going to start with the banks, and it's basically 14th, 15th of January. We're not too far away. And I'm expecting basically volatility throughout the January. And also, you can see maybe one positive thing to talk about going into 2023. If dollar is getting weaker and weaker, and you can see the pullback pretty decent from its October highs, where a lot of companies, like especially international companies, they were every earnings you basically watched Q3, basically whoever made money outside of the US, they were talking about FX rate, because a lot of companies, like in conversion, they were losing like billions of dollars. So, and if dollar stays lower, I mean, those companies are going to surprise with their earnings in Q4 and Q1 if we stay low here in terms of the dollar. But if dollar reverses, we're going to see continued weakness in all those international names. Okay, you can include Apple, Walmart, like there are a lot of names out there. You can just go take a look. At least one earnings if you watch, maybe even just go take a listen to Netflix, what they have to say. I think they lost like 2 billion just in conversions. So dollar pulled back, sitting right here at 104 DXY, and if it starts going higher, not looking good going forward. But if we stay lower, maybe we're going to see some sort of a decent bounce in overall those names that were pretty much weak. Okay, so basically I don't want to make this video too long, but that's the update. We'll definitely talk more about individual stocks, but thanks for watching. This is it. I will see you guys in the next video. Take care. Peace.